And like today, if you were a business that is accepting payment in a volatile asset, it's a ton of work. Because it's like, my favorite problem with this is like, how do you handle refunds? So it's like I buy $1,000 laptop with Bitcoin, and then 4 weeks later I return it. Do I get back Bitcoin? And is like, was that business then forced to hold Bitcoin this whole time and take that exposure on their balance sheet? Like, or are they paying, high fees to hedge against it? It's like you just created, like, I believe that crypto has the opportunity to actually simplify a ton for businesses. Like that's why they should be accepting payment in crypto, but forcing them to then take on a bunch of additional complexity to do it kind of defeats the purpose.
This content is brought to you by BitGo, which is one of the top crypto custodians in the crypto industry. BitGo works with many big companies and brands, such as Pantera Capital, Bitstamp, and Bitcoin IRA. Nike also selected BitGo to power its wallets for its NFTs. And BitGo has many great services, such as hot wallets, custodial wallets, self-managed cold wallets, and NFT wallets. Many institutions trust BitGo with its top-level security and incredible services, such as being able to deploy your capital while it's in custody, which includes lending, borrowing, trading, staking, DeFi access, and more. If you'd like to learn more about BitGo, please visit bitgo.com, link in the description. Welcome to the Thinking Crypto podcast, your home for cryptocurrency news and interviews. With me today is Ben Mills, who's the CEO and co-founder of Meso. Ben, great to have you on the podcast.
Great to be here. Thanks for having me, Tony.
So Ben, I'm excited to learn about Meso and talk about all the great things you're doing. And I definitely want to learn about your background because you spent some time at Venmo and Solana Labs. So tell us where you're from and your professional journey.
Yeah, sounds great. I've been building in fintech and payments for most of my career. I started out at a company called Braintree, which is like a B2B payments company similar to Stripe. And then I went on to lead product at Venmo. Honestly, I didn't expect to get into payments. Like I remember when I was interviewing at Braintree, and Braintree at the time was like, an early stage pre-funded startup in basically like an apartment in Chicago. I remember asking them, I'm like, so like what's left to build? Like you have like credit card processing, like isn't that it? And it's like little did I know how much more you could go into payments, but I'm an engineer by like background, like that's where I started from. And what I love about fintech and payments is it's like this perfect intersection of like technology and engineering, design and UX and business. It's just fascinating to me. But Venmo really is where I fell in love with like consumer financial products. Like the other thing I really like about payments is like you can really directly impact people's lives. Like helping people with their money is like crucial. It also means when you screw up, it can be very, very bad. But there's just was nothing like being able to do that directly with consumers through Venmo. And a big part of my time at Venmo is trying to figure out like, how do we turn this into a business? P2P payments has a bunch of properties that are super exciting, but it costs a lot of money to run. And so like Venmo was basically burning money offering their existing product. And like the thing that really started to click is when we started to offer things like a debit card or banking like products. But through that journey, I came kind of like face to face with TradFi, like the banking system, the legacy payment systems, and it just became clear to me that there really isn't like a future here. Like what we're really all doing is like putting lipstick on a pig, and like maybe we can temporarily be better, but like we're gonna get dragged down to the mean, which is like the banks of today. So it kind of made me a bit jaded on fintech overall, and so I totally went into something different for a while. Worked in education technology. And then after we sold that startup, was trying to figure out what to do. And my now co-founder was like, you have to take another look at crypto and blockchain. And that pulled me down the rabbit hole. And that's where we are today.
Wow. And then how did you end up at Solana Labs?
Yeah. In like 2020 is when I was like, okay, I want to go full-time crypto. I was very kind of convinced of the overall like vision of blockchain and crypto, but I still felt like there was like a ton of like open space of like how is this all going to develop. And so I really wanted to join something that was more like a foundations or a labs would let me get that kind of like 10,000 foot view. And it just ended up working out perfect because Solana Labs at the time was trying to make a big push into merchant-based payments with Solana Pay. And so I joined up with that team and helped them kind of like get that off the ground and get a bunch of experiments going there.
Now, I have a follow-up question about what you mentioned at your time at Venmo. If I heard you correctly, did you say that peer-to-peer payments with Venmo is actually not profitable for the company?
Yeah, I mean, P2P payments, like one of the big things that Venmo did is it pushed all P2P apps to be free, which just makes sense. It's like it's really odd that users should have to pay money to move their own money. Like that just doesn't make any sense. But on the back end of that, like Venmo is still processing debit card payments, making bank transfers, all of those things incur fees and costs that they're not passing on to the user, they're just absorbing. And so like Venmo makes, some amount of revenue off interest of the funds held on the platform. Over the last couple of years, that's actually become very meaningful, but like who knows what happens with that long term. And then they make some amount of money getting fees from like value add services. Like if you want to instantly move money out of Venmo back into your bank, you're paying a small fee on that. But like neither of those things come close to covering the full costs of the payments involving P2P.
Do you believe, and I know we're gonna talk about Meso, but obviously I'm just very fascinated with PayPal and Venmo and what they're doing, especially with the introduction of their stablecoin PYUSD. Do you think introduction of that stablecoin and using it for settlement and all these things would help them to be more profitable? Where
Absolutely. Yeah, absolutely. I mean, like that's to me, like in some ways, I look at a lot of fintech as just like band-aids over like the root problem, where the root problem is just like money does not move instantly. And like because it doesn't move instantly, if you want it to feel instant, you just start layering on like counterparty after counterparty after counterparty. And so in a world where things are all moving on chain, you don't have that fee anymore. So that like, yes, you can absolutely do that.
Yeah, I guess that's one of the big killer apps of crypto, right? Stable coins and instant settlement, everything's instantaneous and verifiable versus like you were saying, the band-aid on these different things, trying to duct tape a few different things behind the scenes. And obviously the consumer doesn't know what's happening, but the businesses have to go through all these processes and all these extra layers of work.
Absolutely. Yeah. I mean, it's just whatever you can do to kind of like minimize your dependencies is a good thing. It just is going to make the product and experience faster, more consistent, cheaper. So yeah, I think that's huge. And I just generally think PayPal is smart to lean into crypto. Like I think that I generally expect that if blockchain really does kind of break through to the next level of adoption, there's this big open question of like what happens to the fintech landscape. Because I do think like a lot of the existing market structure of fintech is based on the foundation of like money movement is not instant and is highly controlled and not open. And so like in a world where that changes, the kind of stack of what you need to like build finance products, et cetera, is just going to change. And so I think that, teams like Visa, PayPal, now recently Stripe leaning in, I think makes a lot of sense because it's like it gives those teams the opportunity to kind of figure out how to navigate that as it happens.
I guess that's part of the macro battle that we're seeing with the incumbents, the banking folks who are getting disrupted, who have controlled the payment gateways and all these high fees, and whether it be cross-border payments or whatever it may be. Crypto is a disruptor of that, a big threat to their business model, but that's the nature of disruptive tech. So I guess that's part of why we're seeing a lot of the battle from the TradFi as well.
Absolutely. But I mean, it is like when I spent time with Visa as part of Solana early on, and it was one of the like first big surprises for me when I was kind of on the inside of the industry was how optimistic and open they were. Like I was expecting that like best case, like a lot of the big incumbents would just be like ambivalent. Like they're like, yeah, I don't care either way. but I also just expected a lot of them to be hostile. But I've honestly found the opposite. Like there's definitely another side to that, and like this gets a little bit more into Meso. But I think if you want to actually build like intersections between crypto and fiat, that is becoming increasingly harder. And like that, some of that is the fallout from last cycle with FTX and Terra. And then some of it is frankly fallout of just bank as a service in general. It's like what I think a lot of people in crypto probably don't see is like during that period last year that a lot of us interpreted as like choke point and like the government coming after crypto was actually the government coming after a lot of fintech overall. Because like, the low interest rate environment created a bunch of like neobanks and like different type of crypto apps that in some ways kind of mirror what we saw on the inside with like CeFi, like Celsius, et cetera. It just like that was happening in TradFi too. And a lot of those companies either like went out of business, lost user funds, just generally did things that were not above board. And as a result of that, a lot of the underlying infrastructure that has been built over the last couple of years to enable these kind of like new financial products is coming into question because it's just like, hey, wait a second, you're trying to say that you're going to act as kind of like a layer between banks and these tech teams, and that like you'll be able to uphold the same compliance and risk and security standards, but like that's not proving to be true. And so like, what should we do about that now? And so that to build in the intersection of fintech and payments, it's definitely getting a lot harder. But generally, I think from a consumer perspective, it feels like more and more we're seeing institutional adoption.
Yeah, certainly. I think everybody thinks of Jamie Dimon when they think about someone who's a critic and kind of
Yes.
hates what's happening. But to your point, I've seen Visa, I've seen some of these different companies start to embrace it, and it makes sense, right? Because adapt or to it or die, right? Disruptions here. So let's talk about Meso and tell us about the history, the services, why you decided to start this company.
Yeah, I think we've seen pretty consistently that every time there's a massive like platform disruption, let's say like the internet and mobile as the two most recent examples, it creates an opportunity for like one or a few platforms to really win when it comes to payments. And so like I think you could argue that like PayPal and Visa really won at the internet. And then like with mobile, you have Apple, Google, Stripe, a few others that are really growing and dominated. But the way we look at it on the inside is it's how do you figure out the right abstraction of like the legacy payment system to this new paradigm? Like that's really the job to do. And like whoever figures out that right abstraction, like the way to make it flexible for this kind of like next generation of platforms, like they are most likely the winner. And so when we looked at the space, like when I was working at Solana Labs, like one of the things we spent some time thinking through is like, should we build a consumer product? Should we build a wallet? Like the idea of like commerce or like e-commerce, like in-person commerce via crypto rails is super obvious. But the problem is it's like a chicken and egg problem. Like to get a business to adopt a new payment method, there needs to be consumers already using that. And like to get consumers to use it, there needs to be places for them to buy with it. So you need to figure out how to crack that in some way. Generally, I think we're gonna have a better shot at cracking the consumer side, which led us to starting to explore this stuff. And as we dug in to be like, okay, well, what infrastructure exists if we want the user to be able to do what they do if they're using Venmo or Cash App or Coinbase, where they can just connect a card or a bank account. And then like over the course of using that app, they can just instantly move money in and out. How can we do that too? And we were surprised that like there just wasn't an answer. Like the closest thing were the like on and off ramp providers, but in many ways like that they're building a product that feels like Web 1.0, where like the way payments worked pre-Stripe and Braintree was like you redirected the user to some page, they get to this checkout page, they enter their credit card information, they get redirected back to like where they were, and they like go on with their day. There's a reason that didn't stick around. It's just because it's a subpar experience. It just adds a bunch of friction for not a good benefit. So yeah, that I think that was like the initial insight that led to Meso was, hey, if you're building a wallet, a decentralized app, really any kind of crypto app, you need to have the same level of kind of connectivity with fiat that Web2 companies have. But you also need to do that in a way that's like even more abstracted because it's the core challenge of like fiat on and off ramping or just moving money between crypto and fiat generally is it is classified as money transmission. So like Stripe, Braintree, all these companies have solved payments is, generally what people think, but in reality, they solve e-commerce. And so like that's why you'll see, there's some awesome experiences involving using like a credit card to buy an NFT. Like one of the reasons those experiences are possible is because that is classified as e-commerce, not money transmission. And so like when you're doing money transmission, there's a bunch of work that has to go into compliance, risk, et cetera. And asking teams to take that on when they're like a small, scrappy crypto team just makes no sense. And so a lot of our vision is like, how do we actually abstract this stuff while still giving those devs the same level of control that they have if they were using something like a Stripe?
So let's do like a mock scenario here for the folks who are listening, because this is very much behind the scenes, right? And so let's say I'm an app developer. Let's say my app, I don't know, allows you to mint NFTs or something like that, right? And I can use Meso to connect to different banks. So let's say JP Morgan Chase, Bank of America, whatever it is, so users can fund their wallet. Is that kind
Yeah.
of the gist of it?
Yeah, like let me give you a more concrete example. So there's a team on Solana called Movement that they've built this fantastic app that makes like buying and selling meme coins basically as easy as Robinhood. And it's a beautiful like progressive web app. It's just like great UX. And what they're doing behind the scenes is they're using like an improved wallet infrastructure to kind of create wallets for users that are still self-custodial, but have, more traditional auth factors like email or social login. And then through Meso, integrating with Meso, the user can also then link their bank via their debit card. And so like once they do that, you can just be using Movement, see a meme coin you like, instantly like load your wallet with however much USDC you need, and then just go buy that meme coin. And it all just works seamlessly.
Now you mentioned USDC. So is the cash converted to the USDC stablecoin? It's not like a fiat to crypto directly. There's that conversion to
Yeah,
USDC first.
this is another price where we were really kind of going a different direction from what we've seen with like on and off ramps generally is we really have no interest in being an exchange. Like what we want to excel at and what I already think we are the best at is like getting funds on chain as fast and as cheaply as possible. The we would love eventually to be stablecoin only because in our mind, like that is literally like the purest thing we're trying to do is just get funds on chain. Like it's going to be in fiat, so let's translate it as simply as we can. The reality is like we're just not there yet in terms of like gas abstraction and other things. So our policy is we support whatever token is used to pay for gas and a stablecoin, like per network. And then a lot of what we've built is designed, to your point, to be in the background. So if you want to give users that experience of, I want to go from my bank account to buying some very specific token, you can easily achieve that as a developer because you can prompt the user to on-ramp. And then one of the other properties about Meso that's pretty unique compared to others is we are incredibly fast. Like almost every on-ramp or when you withdraw funds from an exchange, it's like a multi-minute process at best, if not much, much slower.
Mm.
Our process of on-ramping, we're adding like the most minimal amount of overhead over like however long it takes for the blockchain to just process a transaction. And so like, fast L2s like Arbitrum and Optimism, like Arbitrum, we had someone on ramp in 6 seconds recently, which means like they clicked buy and 6 seconds later, the funds were confirmed in a block explorer in their wallet and they could do things with. And so like when we're that fast, like just swap with the DEX if you want a simple token and like it's better for everyone.
Yeah, that's great. And speed is certainly a big driver for adoption for consumers. No one wants slow stuff. They don't want high fees, right? Sure, as early crypto adopters may not care, with gas fees and so forth, but the average consumer, in the next billion people, they want things that are fast, less friction, and so forth. You mentioned Arbitrum and Optimism. Are you guys kind of agnostic? Or, which blockchains do you support and all that?
Yeah, I think that general, like right now we support Ethereum, Arbitrum, Optimism, Polygon, and Solana, but our generally we're building to be chain agnostic. And what we're working on right now is a number of upgrades that will allow us to basically bridge to any chain, which I think will be great because I mean, it's been really interesting to watch the debate over the last couple months between, like modular versus integrated and all that. But like, no matter what you believe, there's going to be a lot more chains that launch. And there's a lot of really exciting ecosystems that we're looking at, like Berachain, Monad, Movement. Like, there's just so much out there, and we want to be set up where the moment a chain like Bera goes live, we can be live day one. Like that's another problem that we've seen with new ecosystems is like on-ramp and exchange, like centralized exchange adoption lags significantly, which just like effectively like completely cuts off your ability to even attempt to grow into kind of new users.
Hmm. So, tell us about the type of institutions you're working with, because obviously developers can use this. I guess any type of app, wallet service, exchanges. Tell us a bit about that.
Yeah, I think we've seen our thesis initially was there was going to be kind of like two big groups of users, like wallets and dApps. And like specifically within dApps, we were looking at like decentralized exchanges, perp exchanges, et cetera. What as we've developed and started to work with a number of teams, we've kind of refined our thinking, which is like really we think we like on and off ramps make the most sense when you are a wallet. But what's been really interesting is like what is a wallet has become started to get very diverse. So like Telegram bots are wallets. Like more and more we're seeing, like interesting apps like perp exchanges and others where there's like a concept within a wallet or account that's like unique to that app. And so situations like that, that's where like we shine. Like we've been exploring like we've been talking with a few different perp exchanges about how they all have, the concept of like a deposit account. Like we can on-ramp directly into that and don't even have to go through the user's wallet. So it really can open up some really clean and beautiful UX when we have that like direct connection with the user's wallet. So yeah, right now, like I think wallets, and then the other thing we're seeing is a booming set of like what we're just generally calling like crypto apps, where like these are not exactly like D apps. These are like apps that are powered by crypto. So like a great example of this, who we're not working with right now, but we really love them is Sling.money. It's a fantastic global P2P app, and you go to their website and like you can't see anything about crypto, and that's because like they're doing everything in the background. And we're working with a number of teams that are doing something similar, and we're just a great solution for it because it's like you don't want the user to understand, all the complexity of networks and blockchains and all this stuff, and like we can abstract all that and give the user, that like Web2 Venmo Cash App experience.
For sure. And I'm assuming because you're a platform, you're available globally, like any developer from any country maybe can participate.
Any developer from any country, absolutely. We work with teams from all over the world. On the user side right now, we only support US, which is like a big departure from the way crypto normally operates. Our thought process around that is we want to offer the best experience possible, like obviously for the end user, but also for the developer and the apps building on us. And we think the only way to do that is actually to take it slow going international, and like rather than rush to try to get everywhere and dilute the experience, let's build a great experience and expand over time. And then the other thing that we've found in research is, there's obviously a lack of on-ramp infrastructure, especially in emerging markets, but a lot of those markets the issue is not that there isn't on-ramps, it's that users don't want to use like local institutions, period. And if that is the persona of the user, frankly, nothing we're going to be able to do is going to help them. So like our belief is like you should be thinking about on and off ramps from the perspective of established markets, which like the reality is like there's a huge amount of user growth in emerging markets. But when we went to talk about like users that are actually doing high volume, those are more often than not coming from established markets. So like that's where we shine. If you're going after, you know, emerging markets, you really should be leaning into how can I make it easier to do P2P based or OTC based on and off ramping, because like that is the way those users want to work.
And I think the other thing too, in those emerging markets, many of them want, and it seems to be a growing trend, they want US dollars or a US stable coin. They don't necessarily want their own fiat currency.
That's right.
I'm hearing that more and more. So that's why there's been more demand for US backed stable coins.
Yeah, no, we've definitely seen that. Absolutely.
Now you guys did get a $9.5 million seed round. Can you tell us about that and who participated?
Yeah, so that was led by Ribbit and Solana Ventures. We announced that recently, but we actually closed that round in like late Q1 2022. And one of the things that we just didn't want to do is like we don't want to, you know, make a bunch of noise publicly about what we're doing until it's real. And so the big reason for waiting on that is we wanted to talk about it when we had a product and we had something. And you know, when we raised money, we were just getting started, so we kept it pretty quiet. But yeah, it was great. I mean, I think that like Ribbit especially, we've loved working with because almost like 80 to 90% of what we're building is fintech, not crypto. And like one interesting thing that we've observed is there's a ton of people that come from the finance world in crypto, but there's a surprising lack of like payments and fintech experience. Like the reality is like those worlds of like, you know, people involved in like finance and hedge funds and things like that, like have very little to do with people that are involved in, you know, like PayPal, Stripe, like et cetera. And so Ribbit is one of those unique investors who has like a very strong perspective on both sides. Like they've been deeply invested in fintech. Like I actually think probably before even crypto. But at the same time, they're one of the original investors in Coinbase. They've been investing in Bitcoin since 2013. Like they're deeply rooted in the space. So it's like that perfect blend.
Yeah, for sure. That's awesome. What do you guys have on your roadmap for 2024?
Yeah, I hinted on a few things, but like the big one that is like how do we get more into like the journey of a crypto user? So what I mean by that is like how do we position Meso almost more as like a backup option to your crypto balance. So like what I would much rather do is have users be prompted to on or off ramp when they're like making a DEX swap or depositing into a protocol or buying an NFT. And so that to do that well, we need to follow through on the work we're doing on speed, where like the active on ramping is just a few seconds. So it doesn't add any like latency or confusion to the user's experience. And they from their perspective, then they're just like, hey, I didn't have to think about the fact that I didn't have balance in my crypto wallet. I'm just using apps. So I think that's a big focus for us. And then I think the other big one is bridging and like kind of cross-chain compatibility. Like we're spending a lot of time on that right now and hope to see that kind of probably later this quarter or early next quarter. And then the final one is international. So like I said, like we're taking a conservative approach to it, but we still are looking to expand almost certainly into like Europe and parts of Asia later this quarter and into Q3.
That's exciting. I want to get your perspective on the future of payments as it relates to stablecoins. We kind of touched on it earlier as we were talking about Venmo and PayPal. But I'm curious as to your thoughts. Let's say timeline horizon, next 5 to 8 years or so. Do you see it mainly being stablecoins? Because obviously the ethos of Bitcoin and why it started, was to be an alternative currency. It's kind of merged more into or morphed more into a store of value. There are folks building like a layer two lightning network to help improve transactions, but I still see people going more to USDC or Tether and PYUSD. And then I hear Ripple's going to launch their own stable coin. So there's going to be a lot of players in the stablecoin market, and it seems like people want that US backed stablecoin. Is that, do you see it that way, or do you see other payment options in the future?
I'd say almost certainly that is how it will play out. I think there's definitely something interesting in this idea of like flat coins, but like to me, that's just like a very like almost an implementation detail. I think like more often than not, users are going to want to like transact and like use in their daily life something that is not volatile. And like right now, that's the US dollar. And I also just think that the best way to like transition humanity to like a new paradigm is like giving them some way to kind of like think about it from their old perspective. It's like a silly example of this is like the original design of the iPhone, used very skeuomorphic design patterns where it feels like you're literally like turning a page in a book and stuff like that. And like now we don't have any of that. But I think that was like a masterful strategy by Apple because it's like people didn't really get touchscreens yet. And so like this was a great way to kind of introduce them to it. And so where this goes, over a very long time horizon, we'll see. But the idea of starting where people are today, which is like they understand US dollars, it's just a great way to minimize confusion. It's like, there's so much of knowledge and context and like elements of this new system that we're building that you have to kind of wrap your head around as a user. It would be great if we can kind of minimize that to being like, you don't need to worry about these like different forms of money or tokens or things like that. Just start with the ideas of like self-custody, blockchains, like digital assets, period, and then let users kind of graduate into that.
Yeah.
Yeah.
Yeah, that makes sense. And as you're saying that, I'm thinking of, look, there's a lot of merchants and businesses that accept Bitcoin and different altcoins, Ethereum or whatever it may be. But maybe the answer is an instant conversion to a US backed stablecoin, whether it be USDC, and then, like you're saying, the users are more comfortable with that. They may hold some Bitcoin, but to transact fast and to not have to, I don't know, worry about all types of conversions and whatever it may be with Ethereum, Bitcoin, this asset, it all just goes to USDC, and then it's just easy. Oh, here,
Yeah. I mean,
$3.
especially, when we think about this from the long-term perspective, I think a lot of us are hoping that like assets like ETH, Sol, BTC, like stabilize to the point where you maybe could envision it as commerce. But like regardless, like that is far, far away. And like today, if you are a business that is accepting payment in a volatile asset, it's a ton of work. Because it's like, my favorite problem with this is like, how do you handle refunds? So it's like I buy $1,000 laptop with Bitcoin, and then 4 weeks later I return it. Do I get back Bitcoin? And is like, was that business then forced to hold Bitcoin this whole time and take that exposure on their balance sheet? Like, or are they paying, high fees to hedge against it? It's like you just created, like, I believe that crypto has the opportunity to actually simplify a ton for businesses. Like that's why they should be accepting payment in crypto, but forcing them to then take on a bunch of additional complexity to do it kind of defeats the purpose. So that's why I definitely agree that like, I think at least for right now, stable coins are by far the most obvious solution. Like I know Shiraz, who's the head of payments for Solana, like that was exactly his insight, which was mine too. It was like when I saw stablecoins, I'm like, oh yeah, obviously, like this is how we do it. Like if we want to get adoption, like this is the like tip of the spear in the beachhead is to focus on this. And like without fail, every conversation we had with big businesses and retailers, once they like grokked stablecoins, they're like, oh, okay, that's awesome. That makes so much more sense now. Like we get it. And it helps a lot that you have companies like Circle, US company, very by the books, where they're like, okay, cool, like I can just open a Circle account and I know where my money is and I know how this all works. Like it's great.
Yeah, and especially like they're doing a great job of having interoperability. They're putting USDC on many chains, so that's just going to help boost adoption and just cast a wider net. So, yeah, I think that that's the way, and hopefully, these different merchant services and so forth can do that, where instantaneous conversion to USDC, and then it makes it easier for everybody to transact and to account and to keep track of everything.
Absolutely.
Um, Now, there was a question, and it escaped me. I was thinking about it earlier, but it'll come back to me. Anyway, what are your thoughts on the Bitcoin ETFs and how the performance has been? Hong Kong launched their Bitcoin and Ethereum spot ETFs this week. And what do you think about the future outlook of at least for this cycle?
I mean, I think it is clear like validation, like institutional acceptance of the asset class. And I think that's huge. I think it's one of the part things, I think there's a lot of stuff that like once you're on the inside of crypto, you forget about because you're just like in it so deep every day. But one like really core assumption is like, are blockchains legitimate at all? Like, it's like this idea of like decentralized money, like, does that even make sense? And like that in many ways is like the first hurdle that users have to get over. And like when you see BlackRock, big institutions and now Stripe, Venmo, PayPal, et cetera, all saying, no, yes, this is super legitimate. We're leaning in, like you get over that hurdle. So I think from that perspective, it's great. In terms of like what it's going to do, to the market, to the prices, all that I spend just less time on. Like, I mean, I think it's pretty clearly done well for us, and I hope it continues. But generally, like I think we're all looking for what's going to take us out of this like speculative period and into something more concretely valuable. And that's where like things like stablecoins, empowering developers, building new apps and like just accelerating the kind of experimentation, like those are the things I get most excited about.
For sure. And on that note, we're still waiting for the United States to pass clear crypto legislation, balance regulations, of course. We don't want anything draconian. We want to protect consumers when we want to allow innovation to flourish. But there's a lot of regulatory battles happening with the SEC and much more. What are your thoughts on that? And do you think we might see Congress act by 2025?
I I've like I can't say what's going to happen. Like I wish I could, but it just feels like so much of it is up in the air until we see what happens with the election. But the in terms of what I'm hoping for is like I would love to see the SEC stop just like attacking crypto outright as an industry. Like it just 100% feels like we're just throwing the baby out with the bathwater. Like I just genuinely don't get it. Like we had a small group of us with Ribbit had the opportunity to spend some time with one of the Federal Reserve governors who chairs the payment committee. And I was like blown away. We spent 2 hours with him, and it's like he deeply understands the value and the importance of crypto, blockchain, stablecoins, both to just like the world and people, but also to the US and the government and monetary policy. And so to me, like actually the US has this huge opportunity to like re-cement itself as the reserve currency for the world for the next generation. And like instead they're fighting it, which is like very bizarre to me. And then the other thing I just also worry about is, the internet grew up in a period where I think people still were not fully sold on this idea that like people's digital life was going to matter. Like it still was like a toy and like who knows. Now everyone gets how important digital is, and we're seeing like an increasing amount of regulation just across the board. Like AI is the best example of this recently, of like a bunch of regulation really quickly. And like I can't speculate on what's going on with AI. It's way outside my area of expertise. But generally, I worry about like regulation just slowing down innovation. Like tech is just too flexible, where like it becomes this really dangerous thing where you regulate it and all you do is you cement the big players because they know how to navigate and get around it. And like you leave the small startups basically just cut out of the market. So I worry a lot about that. And then I think the other thing I also worry about that is like tangentially related to crypto is just financial crime and consumer protection laws. Like I think the spirit of the CFPB and like the laws and regulations around that are incredibly important. Like it's tragic the stuff that companies were doing pre the CFPB, CFPB being the Consumer Financial Protection Bureau.
Mm.
But trying to create like general regulation that applies to like every financial product is effectively impossible at this point. And so like recently over the last 5 years, we saw this with prepaid cards. So like, you might, your audience might not spend a lot of time thinking about that, but prepaid cards are how a lot of Americans who don't have a lot of money access the financial system. And they generally are like almost predatory with like fees and all that. So it's like great problem for the government to crack down on. But the fallout of that was classifying basically every digital wallet as a prepaid card. And it was like it pushed PayPal, Venmo, Cash App in this position where like we have to do a bunch of unnatural things that we know don't actually protect our users. It just makes their life harder. And like, why are we doing this? Why are you classifying this way? And so it was great to see, I forget exactly when it was, but the last couple of weeks, PayPal actually did win a case against the CFPB to be like, you should not classify us this way. And so like, that's awesome. But like, that's PayPal, one of like the heavyweights pushing for that. When that comes to crypto, it's like, frankly, crypto has bigger problems with the SEC. They can't fight this battle on multiple fronts. So that's something I worry a lot about. And then financial crime. I mean, I think most of us in crypto have heard about heard are just very skeptical and worried about KYC, privacy and all that. And that's something that we think a lot about at Meso. I mean, we're in this really tough position where if we want to participate, we need to do things like KYC, data collection, et cetera. And so what we're trying to do is it's like, how do we do it in a way that's clear and transparent and right by the user, so that we can all participate, but then push the industry and regulators in a direction that I think is better. Because it's like the thing a certain politician likes to say that like, crypto doesn't like to follow the rules. And in my mind, like the beauty of crypto is actually a lot of the rules become irrelevant. It's not that we don't want to follow them. It's like we shouldn't have to follow them. And that's actually better for everyone. It's like like KYC in many ways is what created like identity theft. Like
Yeah.
if you didn't have those regulations, like we wouldn't have this huge problem that is actually destroying people's lives on a big scale. And I'm not going to speculate on like what's the like ROI, is KYC really worth it? But I think there is a real argument to make that it's just not. Like it doesn't protect us enough, and it actually hurts average people a lot more than it helps them.
Hmm. Great insights, man. I appreciate that. So I got some wrap-up questions here for you. First, if you could create your own metaverse, what would the theme be?
Oh, honestly, I like one of my favorite things Vitalik has recently put out is like, keep Ethereum cyberpunk. And it's like, so like that's 100% my answer. Like cyberpunk, like that, like kind of bleeding edge of the internet is what I love. Like degen culture, all that is just like it's such a fun part about crypto. And I'd definitely lean into that.
For sure. Rapid fire questions. First is favorite food.
Hmm. This is boring, but pizza. I love pizza.
Favorite musician or band.
Hmm. I doubt anyone will know this, but I love like lo-fi electronic, so 07.
Nice. Favorite movie.
Hmm. I have a bunch of young kids, so I watch a lot of kid movies. So basically, like any Studio Ghibli movie is like my favorite because it's something that like I can actually enjoy and they can enjoy. So out of that, probably I'll say Ponyo.
And favorite book.
Oh, um. I have there's a bunch of books I really like. One that I was actually talking about recently with some people is the Doom, like the video game biography. It's like phenomenal, like such an interesting book to get the insight into like Carmack and how him and his team were thinking about things at the time.
Oh, I have to check that out because I do.
I'll send you the link. I want to figure out exactly what the name of the book is because I forgot.
Yeah, that
Um,
sounds fascinating, actually. And when you're not working at Meso, what are you doing for fun?
Spending a lot of time with my kids. I have three young kids. That a little bit of photography, and some other stuff on the side. But yeah, between kids and an early stage startup, do not have a lot more time beyond that.
Ben, pleasure chatting with you. I love what you guys are doing in Meso, and I would love to have you back on as things progress. But thank you so much for joining me.
Yeah, thanks for the time. It's great to be here.